Canada's banks could be gearing up for a mortgage war to fight for your business. So I want to show you all where rates stand right now. This is as of this morning. This is the 5 big banks. So we look at Scotiabank is at 4.69%. These are 5-year fixed, 25-year amortization, by the way. TD, 4.49%. BMO, 4.45%. RBC, 4.44%. And then, you can see RBC there again. And then CIBC at 4.34%. So that's where we're at right now. I want to bring in financial commentator John Ehrlichman. Good to see you this morning.
Good to see you, Lindsay.
Yeah, so when we look at those rates, I mean, very different from what we saw even 6 weeks, 8 weeks, 12 weeks ago. Why are we expecting competition to really increase here?
Well, a couple of factors. First of all, if you think about all these mortgages that are coming due over the next couple of years, actually the Bank of Canada has estimated we'll have more than 4 million mortgages renewing over the next couple of years. It's like 60% of the market.
That's a lot.
It is a lot. And if you go back to the beginning of the year, it was actually a major concern for the economy because you had a lot of people during the pandemic that got mortgages at basically next to nothing. So there's that sticker shock worry for the economy, which has already been weakening. But the fact that we've seen this fight against inflation go fairly well, I know there's still some inflation in parts of the economy, has allowed rates to start coming down, to your point there. So for the banks, like, renewing mortgages to people who might have trouble paying mortgages is not the best value proposition, but if rates are improving, maybe the customer profile is better, and if they need more business, there was an analyst on Bay Street who used the example of TD. They got into all this hot water in the U.S. If they have to make up that difference by having more business in Canada, maybe there's more competition, but that competition depends on both what the banks are willing to do and what you're willing to do. As the shopper for a mortgage.
Yeah, supply and demand. When we look at the first 3 weeks of November, nearly 8 in 10 Canadians opted for a fixed mortgage rate. Now, this is one of those things that is a really interesting point of conversation because everybody that I've been speaking with over the last little while that's had to either renew a mortgage or get a mortgage in the first place, there's that conversation, well, will it go down more? So that conversation around variable versus fixed, what are we going to see in that world?
This is a great question. And hey, I was one of those people who went for a variable rate mortgage when the Bank of Canada governor basically said, read my lips, we're not raising rates. I think this time around, because so many people have watched that change in rates so rapidly, because historically a variable rate mortgage is a pretty good bet for a consumer. People might be gun shy. That's what we're hearing from some of the mortgage experts right now. The trade-off might be some people might go for a fixed mortgage, but maybe a shorter duration, like 2 or 3 years. Just giving you that certainty. But here's the challenge. When you look at the economy right now, like take inflation. The most recent Canadian inflation numbers showed an uptick in inflation. So all of a sudden, after 4 consecutive rate cuts by the Bank of Canada, we've got another one next month. People were thinking, oh, they'll cut by another 50 basis points. All of a sudden, the traders say, well, maybe they won't. So even though there's a belief that rates are going to keep going down, if, B&M Bloomberg and all the channels are saying it might be, it might not be. I think people are still going to be trying to figure out whether they want to go fixed or variable. But I think people are a little gun shy on variable right now.
I mean, off the top, you're talking about how many people are going to be renewing their mortgages. You mentioned, what, 4 million mortgages are up for renewal in the next 2 years. That's 60% of the mortgages out there right now. So we talked about the 5 big banks, but are people willing to shop around at this point? Because there are other options.
Okay, and you and I talked off camera about whether or not Canadians really do shop around. I don't have the hard evidence, unfortunately, but I think, well, you're always right, but it's quite clear a lot of Canadians just accept what a bank will give them. It's not like banks are putting out posters saying, we want your business at a lower rate, but we have heard some anecdotal evidence that within the branch and within the mortgage broker network, banks are saying, okay, you can give customers a little bit more flexibility. And flexibility, keep in mind, yes, the overall rate is important, but a lot of people will say a refinancing is kind of like your free agency, right? In sports, you want the big contract, but you also want to play a certain place that might be good for your family. There's all those other things associated with a mortgage, prepayments, or whether you need to step out of that mortgage in the future and what fee you're going to pay with that, or whether your parents are co-signing or you want your spouse. There's a lot of stuff that's up for negotiation in a mortgage process, which you can talk to your bank about.
Yeah, it's like signing on with a new company. And are you going to get benefits? Are you going to get all that stuff? All of that is part of the conversation that people need to have. It's not just about the rate.
Absolutely.
All right, John Ehrlichman, always good to see you. Thanks so
Lindsay.
much.
Good to see you.
If you liked that video, make sure to subscribe to the Your Morning YouTube feed where you can find all kinds of new content posted every weekday morning.